Yo, what is up, chat? How's everyone doing? Welcome back to the final episode of After the After Hours. It's none other than your host, TraderPrad. Hopefully everyone had a wonderful end to their month, and I for sure goddamn did today, boy. It was amazing. What a great end to the month. No complaints, ain't no complaints. Rex in the bank. I don't know the rest of the song, but oh well, you guys understand what I'm getting to. Money was made, opportunities were there. We seized most of them. We won some of them, but the ones that we won ended up paying us, and that's all that matters, right? Corey, what's up? You know, for a second the market was P-Diddying me. But at the end of the day, TraderPrad came out up on top, baby. We came on top. Well, pause. Hey, yo, came on top, especially when you're talking about Diddy and Meek Mill and all this. Pause. Hold up. Let's rephrase that. We ended up on... Not even that sounds wrong. Okay, we came out victorious. Let's put it that way. At the end of the day, man, monster trades today. Opportunities on the market all over the place, up, down, up from the 830 number. Later on, pulled right back and made a new low a day. Eventually, later on, got right back into the high a day. Apple moving right back into 180, breaking 180. We were talking about those levels. A CRM going into a new high. CELH, we talked about CELH last night for that all-time high breakout, and that moved to a whole new level to the north side. So a lot of the stocks that we talked about last night moved around today, which is great. Hopefully a lot of you guys were able to take a trade on that. I'm actually going through my watch list right now and seeing if I have CELH on there. I do. Okay, good. We do have CELH to talk about because that is a monster move to ignore. So we'll see what happens over there. Lots of stocks on board, lots of moves to be covered, lots of action to be filmed. So let's see what happens for all the opportunities tomorrow. Now that we know that the market had like a somewhat of a mixed reaction off the open and eventually later on got back to the highs, we're looking to see if the market can continue off that and bring in some help to the positions like Apple, Tesla, and all the other stocks that kind of got beat back today. Tesla 205 came into play again, but that got pushed right back down. So I'm just trying to remember what other stocks. I didn't really look at Microsoft today, didn't really look at Nvidia, but AMD, now I remember AMD. I had 183 long. My God, what a stock that was. I got out at like 187 or something, if I remember. But what the hell is that position today? AMD into 194 or something? Like, oh my goodness, everything was just crazy. And we kind of told you guys to be ready for it, right? If there was something to happen, it would be today. There was a lot of options expiry happening, and a lot of moves were expected from the market, because if options are expiring, people who got exercised and previously might not have had the shares, and they were, you know, probably thinking that they don't have to buy the shares and they're just sitting on their naked position. Now they got exercised and they have to go buy those positions. They probably ended up helping with facilitating some of this moves over here on the market today. That's why days like today, the end of the quarter, the end of the month, the triple witching every third Friday, especially when options are expiring, very important days over here on the stock market. And we did get that move that we were expecting from the market overall. Nice 8% to the upside on the tech basket. Only 3%, but that's S&P 500. You can't expect S&P 500 to continue making those 1%, 2% moves that we're so acquainted to. Sadly, we're not getting that right now. The markets are just chilling out for a bit. This whole week has been sadly a little choppy. Just sideways, very choppy. Today helped out a little bit, but it also looked like we were going to chop up for the most part. Let's see how tomorrow sets up. Hopefully tomorrow we don't just reject these highs and pull right back into this whole week's range and struggle. That's going to be an absolute party pooper if it ends up setting up that way. But we're here to talk about all the opportunities, so we'll go through them, we'll cover them. Let's see who's in the chat. TH, Corey, and Trade in a Yacht. How's everyone doing? How's everyone's day going? Hopefully your February ended on the green note. Mine did. Thumbs up, 2 thumbs green. I don't know if that makes sense, but 2 thumbs up, and we are on the green side for the month. Hopefully you guys were able to do the same. If not, let's see how we can help you start the month right for March. Tomorrow, the 1st of March, getting ready for all the moves over here, coming in with the fresh hot watch list for today. So let's go to the main screen. Here's a main screen. Here's a watch list for today. Zscaler, Soundhound, Dell. Basically a lot of stocks that came out with earnings after hours or probably will come out with earnings pre-market. Actually, I don't think I saw the watch list or stocks that are announcing pre-market. I did not. So Plug Power, probably something to keep an eye out for. Fubo TV is like a lower price stock now. I'm not even sure if it's even $1 anymore. What is Fubo TV at now? Oh, it is $2. Better than FISKER, surprisingly enough. So maybe we could put this on the watch list, especially if it makes a move in the pre-market. Fubo TV is also heavily shorted, I believe. Let's go to Finviz. Where's Finviz? Finviz. There you are. Fubo. That sounds like Kudo. Do you guys know what Kudo is, or is that just a Canadian thing? Or is that an American thing? I don't know. Short float, I thought so, 17%, but it's not even in the red color. Usually when they're in the red color, it means they're overly shorted. Not overly, but they're shorted more than probably 30%. I think Finviz colors it red based on 30% marker, but these guys are pretty damn close. 20% over here, 17% to be exact, short float for Fubo TV, and they're coming out with the earnings report pre-market. Possible to keep an eye on them, but Plug Power is the other one that you might want to keep an eye out for tomorrow pre-market. Usually a little bit of a mover on earnings reports. It's also a little bit of a cheaper stock, so let's see if this one can be added to the watch list. How much is the volume? Yeah, pretty good volume, man. 50 million shares traded on the average. Yeah, pretty much on the average. I think Plug Power deserves a respect to be put on the watch list. So right here, let's add one cell below, and we'll put in Plug Power real quick. We already know what the ATR is. I think we can grab it right here, 17 cents, and I think that's part of the reason why I don't want to trade the stock anymore. But it's a $3 stock, Brad. What do you expect from it, right? You can't expect a dollar range from a $3 stock. That'd be crazy. Let's get to Zscaler, which is the first stock on the board over here. Oh my goodness, I'm gonna have to delete all of this. Let's do it. Delete. I didn't have enough time to do most of my charting before stream today, so we're gonna have to do it right now because I got home a little bit late after gym and everything. Got home slightly late today, but now that we're here, you guys are going to see all of my processes at the same time. I'm gonna delete. Nope, don't delete that. That one comes back, please. Delete that one. Not that one. That one. Delete that one. Thank you. Okay, let's go to the 1 year chart. Put in a couple lines that I need. And now we put in the today's high and today's low. I set that oppositely compared to what I did. Okay, oppositely. Okay, today's high, today's low. We have that marked up. Today's the earnings day. Let's fix that scale a little bit. Zoom back out on the stock. Looks like we're not really into all-time high, but a pretty good reversal from what, 2023, I guess. Halfway through 2023, we've been on somewhat of a heater over here. So maybe I want to take a look at what this buyer is doing from here. Yeah, surprise, surprise, right? That buyer from there has been buying ever since. Let's just put this one over there on that one. I'm gonna rename this one from just earnings, because I know that's what I used to call it, into the date that it comes from. That way I know exactly. This is just the 52-week low. And now today's earnings. So this is the 52-week high. Let's put a marker at the 52-week high, which is around $260, $259.50, $260. On this earnings move, if it is green, which it looks like it is, 30% beat on EPS, 3% beat on revenue. We're gonna open up Benzinga over here too. We're gonna let that load. In the meantime, I'm gonna continue charting for myself. Let's see if any interesting levels show up. That looks like an area of interest to me to the north side if the earnings report is green and the move came out to that direction. But if the report came out red, how would have the stock possibly moved? I was gonna go to a 60-minute chart, sorry, but if I do that, most likely I will see the move itself. So I don't want to see that just now. I just want to chart for now, and then I'll be ready for the move after I have a couple lines down. So we have possible support in this area. In my opinion, we got that 52-week high. If the report is bullish, I think we're already above the 52-week high, possibly in 280, 290 areas. So let's go see. The report did look green, and let's go see if it did move in that way. Oh, sadly, it moved to the downside right into the previous earnings report. Right into the previous earnings report, Anchor VWAP coming in for support. This is that 52-week low Anchor VWAP that we just put in not too long ago. So looking for even more support coming in over here into that 206, 207 area. But if you zoom out that 52-week low, it's actually at $170 over here on the daily chart, which is more of a longer term swing term low move if the stock's earnings report's actually that bearish, which we're gonna go find out in a second using our friends over at Benzinga. But right now, off the price action over here, stock getting absolutely flushed to the downside, even with what looked like a pretty good report. So let's go find out why. Feb 24 coming in with that side. We did try to hold in this area a little bit. Surprisingly, we failed after holding that over there and pushed right back down and found a little bit of support right in this. We got a nice little anchor VWAP pinch setup coming in, honestly. That could break out to the downside or break out to the upside. So that's a little bit of a setup from our friends over at Alpha Trends. Shout out to Brian Shannon. Look, quickly, I need to drink of water. Hey Brad, today was a good day of pain. Tomorrow is Free Fall Friday. Okay, well, hopefully it is. I try not to jinx it these days because every time I say it, the market freaking reverses on me. But yeah, I try not to jinx it these days. Hopefully it is. Let's see if Free Fall Friday can come into our pads tomorrow and we can enjoy some moves to the downside. But currently talking about just earnings plays. We'll get to QQQ in a bit. Good, bro. Let's get it, says Corey. Yes, sir. Let's get it. Money in the bank. Show me what you got. Zscaler, first stock on the board. Let's go see how their earnings report came out. I just saw AI on the Benzinga over here because we were looking at AI's report, and boy, oh boy, did that stock have a move today. So, but let's go take that copy from no, stop. Thank you. Let's go copy this earnings report from Benzinga and put it in ChatGPT for ourselves. But if you guys are interested in tools like Benzinga, I use it for news basically. You can use it for scanners, for charting. They also have a chat that you probably just saw me close. That chat is also a great chat room for you to be in if you're just a beginner trader or even an intermediate and a advanced trader. So go sign up for Benzinga. Use the code down below in the description and check out that amazing tool. We're gonna grab all the earnings reports from them today for the rest of the day, put them in ChatGPT because we're trying to save some time and see how their report played out. So here's Zscaler. Earnings was 76 cents compared to the analyst estimates of 58. Revenue came in at 525 million compared to what the compared to the estimates of 507 million. I was gonna say estimates was 387 and they did this and the stock still went down. Like, what are you talking about at that point? But that's not the case. This represents a 35.45 increase over sales from same period last year, so pretty good bump over there. Billings grew by 27% year over year. And deferred revenue increased by 35% year over year. So all things are looking good. CEO commented on the results, stating that we delivered strong Q2 results with billing revenue and operating profits all coming in above our guidance as customers' interest in Zscaler's Zero Trust Exchange platform remains high. Market demand highlighted the increased number of customers recognizing the limitations of traditional firewall-based security and engaging with Zscaler to transform their security to Zero Trust architecture. Okay, I just want the outlook, honestly. Outlook 98 million to 100 million, and the net income per share, so net earnings per share, to be between 64 cents and 65 cents. Fiscal quarter to be between 395 to 400, and net income to be between 2.73 to 2.7 cent per share. But what is the estimates, man? Why don't they ever tell us the estimates? This is where, we were having a little issue with stock like, what was it, Snow yesterday. We were wondering why Snow got beat down quite a bit. They didn't really tell us the estimates. They only told us the outlook. And once you know, I kind of dove deeper in the morning on my way to work, kind of reading other articles on my way to work today, I saw that CRM, or was it, I was talking about Snowflake actually dropped down because they missed earnings, not earnings, so they missed guidance, and they missed it quite a bit, and the CEO also left, which we actually knew that part. So a little bit of that would have been nice to know. So not sure if that's the same case over here. You know, they are outlining, which looks to be a good report. But if this report is not in line with the estimates, that might be the reason why the stock fell down about 5% to the downside, and had a little bit of a whippy move right back. You can see how it got bought right back up, but then got sold right back immediately. That buyer got immediately matched with the seller, so it was like there's some seller over here just dumping this position right now. Not sure if it's just profit taking, or the report, like we just said, is actually not as bullish as we thought it was. So a lot of things will come into play in pre-market for me, not right now. The screen is distracting me. I'm gonna close that screen. I have that the YouTube video that's playing the music, and it is just like things flying in the background, and that keeps distracting me, so I'm just gonna close it. Zscaler, you know, a lot of things over here in pre-market are gonna be important for me. How do we set up in pre-market? This low that the stock seemed to have bounced a little bit and then finally breaks down to the south side, that area right here will be very important. It's also right where the 50 period EMA is and the earnings anchored VWAP from today. So I'll be looking to see what happens into this area. At the same time, to the downside for $200 or so. I mean, we didn't really go into 200, somewhere into 218 at the moment. You're looking to see what happens, maybe somewhere down over here. But if we are back to the downside and kind of trading in the lower end of this range, then the report is clearly bearish, and then I could see a bigger move to the downside over the you know, longer period term of day, going into the close over here somewhere into 206, or even all the way back down to 200. So watch out what happens on this position. The stock would have gone down. My dog's tripping out. The stock would have gone down about more than 10% at this point. That drop right there is 12%. We're hanging around 7%. So if it does go back down over here, that triggers SSR. So if we are not down back here off the open, we will not be triggering SSR. So in my opinion, we could easily go back into this after hour little drop hold that we popped off of. We could easily go back in there, trigger SSR successfully, and then start bouncing back up, in my opinion. So watching this area of 218 tomorrow, seeing how that behaves. If the stock is already under 218 off the open, then you're kind of watching maybe what happens into 216, or even this little buy over here that came in. You know, pretty decent volume took place on that candle. And buyers clearly came in off that earnings report. They didn't think it was that bearish. They got bought right back up to the north side, but whoever's being bearish, they said no, I'm the big boy here, and he bullied them right back to the downside. Some of them did manage to stay afloat still, probably. They bought right back over here, but it's a big battle at the moment between the buyer down here and the seller up here, and I want to see how the stock resolves going into the close. But as for a trade tomorrow, looking to see how it does in pre-market. Let me just kind of draw out what I'm looking at. I think something like this in pre-market will set up for a beautiful breakout to the downside, or a beautiful breakout to the upside for us. But if the stock is already above here in pre-market, then you're looking for possibly a reversal, because the report wasn't really that bearish, unless that guidance is bearish. And if we are somewhere down over here, then I'm expecting, you know, probably looking to see what happens in 213, and 213 holds, possibly gives us a long off of that. But if 213 doesn't hold, I'm thinking we go all the way back into this 52-week low anchored VWAP, where that stock got absolutely destroyed. I can't do that, Oso. No, that's a little secret trade, my friend. But yeah, that was a good day to trade green at the end of the day for me. That's a little secret trade. We can't be spilling all the beans. Sometimes we spill most of the beans, like talking about all my setups about anchor VWAPs. Most of my setups are around anchor VWAPs and opening range breakouts. I love opening range breakouts. Also, I've been including a new setup. I call it the Gap Give Bella Scalp. So looking for how that setup plays out. I do have a scanner built out. I've talked about the scanner quite a bit in front of you guys. Shout out to Trade Ideas for facilitating me with an account that can use setups like these. I'll talk about those setups in a second. But No. Some of those setups are secret setups, baby. Coming back to the floor over here, coming back to the Zscaler stock over here, looking to see what I want to put in my notes. I think the first support I will be watching, I mean, I do have this previous earnings anchored VWAP area of 222 right now. I don't really want to use the derivative values as supports or resistances. I much rather use the horizontal levels that are kind of already mapped out for me and see how that play out. And now that we know that the stock, how it played out on the after hours, let's go to the 60-minute chart and see if we can find any intra levels over here that we might have missed out. Nope, I'm pretty happy with all the levels I have mapped out, honestly. That's the previous earnings right there. Yeah, I'm pretty happy with all the levels I have mapped out. And that's the 52-week low anchor VWAP around $170. I don't think the report's that bearish for the stock to go all the way back there, really. I honestly don't think the report was that bearish for the stock to go all the way back down there. So looking for buyers at the end of the day. Let's see where buyers step up. Can you show up, buyers? Do you have the buying power to fight the seller? Right around all my levels over here that I mapped out. 218 first support, 213 second support, 206.50. Oh, I'm typing the wrong numbers. 206.50 third support, and then last support 200, which honestly I don't think the stock should go that deep to the downside tomorrow. That would be like way more than its ATR. It's already from what, 240 into 220. That's 2 ATR of a move already. The stock's ATR is exactly $10.94. So it's already a 2 ATR of a move to the downside. Are we really looking for, 4 ATR of a move overall? Like that would be crazy. So let's see what happens tomorrow. I think we do end up finding support before going into 200, and it'll be great to see where we can get long into. But if we do get long, we got to know where the resistances are and kind of watch out for those areas to maybe take profits into, or maybe add on the breakouts of those areas. So watching 226 at the moment for the first resistance. These levels will obviously change depending on where we are in the pre-market, so keep that in mind. You want to consider very, very close as to what the stock is doing in pre-market. Hello, what's going on with my mouse today? Is my mouse dying? Oh, that's why. I need to charge this mouse. 236, which is today's low coming into play. If it does, then I think that's an easy rejection short. I don't really think we reclaim all the way back like that. That'll be again a 2 ATR move. That's 1 ATR. That's 2 ATR. Maybe we could reclaim all the way back and then just struggle. I'll just put in today's high to be safe. I'll just put it in to be safe so I don't miss it out. Don't want my laziness to ruin me from a good trading opportunity. So I'm just gonna put it out there for my own sake and see if it can help me out. Blind Jedi's in the house. Sub Blind Jedi. Dieter's in the house too. What's up? Hopefully you guys had green days, boys. How'd your day go? Let me know. I know Blind Jedi was actually I don't know. That's a lie. I have no clue what you did today, Blind Jedi. I have no clue. Dieter, you still trading, or you busy with still taking pictures, my friend? How's that pictures going of those naked, you know what I mean, of those naked I was on sim. Okay, how did that go? Did you at least treat it right, or did you treat it wrong? Hopefully you didn't treat it wrong. Not good when you treat it wrong. Adjusting my strategy, I like it, I love it. Always good to do that. Don't have to throw the whole strategy out the window though, because your strategy was paying you for a good chunk of your period. But obviously when market environments change and different things happen in the market, like interest rates are changing most likely very soon and so on, your strategies might fizzle out a little bit and you might need to make a new strategy. It's just the name of the game. You already know. I don't have to tell you about this, but I'm just saying it out loud for the other viewers over there who probably are still new. They don't really understand what we're talking about, right? It's all cycles, ladies and gentlemen. It's all cycles. At the end of the day, everything just works in cycles. They go in, they go out, they move positions in cycles too. So it's growth at one point, it's tech the next point. Sometimes it's just random BS like weed or whatever. It's all cycles, right? As long as you can survive all the cycles and see how each cycle plays out, you will never be able to stay in this game long enough, right? So part of that strategy of staying in this game long enough, as one of my friends in my other Discord server said today, it's like poker. You will eventually get a pocket aces, which in my opinion are the worst hand to have, because every time you get a pocket ace, you either screw up the position sizing for yourself, or something bad always happens. Every time I see someone with pocket aces, it's never a good freaking hand. I think having 2 kings or something is always a better hand, but if you stay long enough, you will get that hand. And for you to stay long enough, you have to know when to take a risk, know when to not take a risk, know when to not size in and size out, and so on. So that's part of the strategy, which is stepping back, adjusting strategy, going into simulation, just maybe going back to the textbooks, opening up a new book or whatever it is that you need to do. Go back to the drawing board, start making up a new strategy, and that's how you start doing it. Today you look like the old man on OnlyFans that eats a banana. Talking about eating a banana, I have a banana to eat. Should I eat a banana right now? I'm hungry, I'm starving. I haven't had dinner for the last few days now, because obviously I'm going back to work now. I haven't had time to even come home and hang out with my family, because after work it takes me too long to get home. I go to the gym and then I come home, and then I talk to my family real quick, couple seconds, boom, get upstairs, make the thumbnail, work on the watch list, do the show. Cannot eat dinner because I'm doing the show for too freaking long all the time, and then I have to eat dinner at like 10 o'clock. So then I cut my amount of dinner I eat, because I hate eating dinner so late. And then I have to still go and chart the rest of my night, because I'm not really done charting. So I sleep at like 12 o'clock. Oh, it's so hard, my life, guys. Don't forget to write some novels on Discord. Shut up, Lonnie. Shut up. Okay, look, this guy is like, I have him on quick draw. Okay, I have this dude on quick draw right now, because it's honestly useless information. Look, now I'm just gonna divert away from my own topics on the day. I'm gonna show you how useless this information is. Okay, this guy's talking about how this 180.75 was such an important level because Apple traded 14, what is that, billion dollars, whatever number you want to call it. Awesome, bro. Cool. How do you use this information? Okay, how do you use this information? Are you telling me that tomorrow, just because you saw a block trade, where is this picture? Let's open it over here. Just because you saw a block trade of 14 billion or whatever, what was that freaking price at? 180.75. Okay, 180.75. Which is where we close today. Sorry, I forgot. Which is where we close today. So what are you gonna do with this goddamn information tomorrow? How are you gonna apply to your trades tomorrow? Tell me. You freaking moron. And I'm trying to help you out. I'm trying to tell you that there's things to track. I'm giving you the secret sauce, telling you what to track, where the juice is. Instead, this guy's fixated on one of the most useless information in the world. What are you gonna do with this dark pool information? For one, dark pool is reported 24 hours later most of the times. So half these, for example, if I pull up a chart from my own platform right now, you will see charts sometimes that are well above than the real actual candle of the chart. Those are dark pool candles being reported 24 hours ago. How is that information relevant to me now when I'm making a trade in this very goddamn second? Sometimes those levels will show up on your chart as a whole different level that you will not even see as a day trader. So how does it matter to you? This guy is smoking ganja, and I'm literally giving you the secret sauce. I'm telling you exactly where the information is. But buddy is tripping out, and okay, here, I'll prove it to you. 180.75 Apple. 180.75 Apple, most volume done on the close. Oh, look at that, it did 14 million on the close. Oh my god, that's so important. Oh, okay, next he's talking about Amazon. Let's go, Amazon. 176.76. Magic? How did that happen? Oh my god, this guy's crazy. This guy knows all the secrets. Okay, next. AVGO 1,349 cents. $1,349 times 2.7 million shares. 2754 times 1300 is 3 billion. Okay, what does this picture say now? Let's go see. What was that? AVGO. Like what? Okay, let's go with the smaller stock. Let's go with the smaller stock. Okay, Intel 4305. Wow, how does that happen? All right, maybe this was a fluke for today because today was a rebalance day. Okay, today was rebalance day. Unreal size today for sure because today was a rebalance day. Let's go look at some of a different picture then. Okay, this is from the day before. Yeah, this is from the day before. He's highlighting Nvidia and Apple again, and they did tons of volume and tons of money and tons of shares. Okay. Actually, this won't help me. Oh, what the hell am I doing? What was the stock that we were just looking at? Where'd it go? Where'd it go? Where'd it go? Where'd it go? Oh, right here. Apple from 28th of February. Historical data. Apple 28th of February. Close 181.42. Let's see what the numbers is. Oh my god. Wow, guys. Insane. Guys smoking ganja, dude. I'm over it. I'm over that dude. I'm over that dude. Anyways, going back to the market that we care about, going back to the trades that actually will get you paid, and that's why you come watch me, and that's why you follow me. All right, let's go to stocks that get you paid. SoundHound. SoundHound has been a little crazy going into its earnings report. Not sure what the catalyst was. I'll be very honest with you. Before this whole move, a little bit of a squeeze, small flow. Oh, actually, I think I remember now. Nvidia said something about SoundHound. They said they own a share of SoundHound or something about Nvidia and SoundHound came out because I saw Jim Cramer crying about it, or maybe not Jim Cramer, but I saw other Twitter accounts crying about it, and eventually they got posted over here to the upside, right? So you're watching this move to the upside over here on sound to the upside, and then a little bit of a consolidation into previous levels. Here's the all-time high. That is the IPO high. We didn't even get there, sadly. We're into this consolidation high over here, 873. Now the report looks red. I already know that the move was to the downside because we got to see the move already. So looks like the play might be over to the long side on SoundHound now. If you are one of those people who are long SoundHounds, you might want to be careful. The stock is getting absolutely destroyed now, most likely tomorrow. This report looks bad, man. The report looks bad. 25% miss on EPS, 3% miss on revenue. Do I even want to go look at the report overall? The price action is kind of telling me exactly what I want to see. You got a beautiful bear flag coming into, I don't even know if you want to call this a bear flag. It's kind of like a symmetrical triangle, honestly, that broke out, and we pushed right back into lower day. Into lower day, you got a nice little U-shape, upside down U formation coming in. Usually Michael Noss calls this the frowny face. This is on the 5-minute chart, so maybe it's a little bit valuable. The stock looks like if there was more time to trade, it wants to go lower and lower. Now look at what we're doing over here. The stock is most likely crashing tomorrow, down like 100%, so watch out for that one. I mean, maybe not 100%, but it's for sure going to the downside tomorrow. We're probably going back to negative 50% over here on Soundhound without doubt, right back into these $3 ranges. And I'm gonna be looking to pop short every pop on Soundhound without fail, shorting every pop any chance I get to short the stock. The report looks pretty damn bearish, and everyone who got long is trapped. Everyone who got long is trapped, and all their stops are going to start getting triggered on the break of $5, on the break of $4. So they're all just absolutely screwed. They're all absolutely fucked. Okay, so watch out for Soundhound to the downside over here tomorrow. I'm going to put in, yeah, that level right there, which is around $6 on watch. If we are able to, I'm going to put it as support for now, but it's actually just infliction, and I think it turns into resistance based on how it trades in pre-market. But if we are above the $6 area, $5.95 area in pre-market, then maybe I was right by putting 6 as my support. Today's low was around 650, 663. If we do get there, possible great opportunities to short. The stock's ATR is 66 cents. We're seeing dollars in the move tomorrow to the downside most likely. So watch out for Soundhound AI. Bad report, sadly, and not going to join the AI move anymore. Dell with a monster move. Oh my god, Dell, what the hell is this? I'm pretty sure all of this was just Alienware. Let's be real. Dell is garbage. It's all Alienware who did this to the stock. So shout out to Alienware for the move. No, I'm just joking. Dell is oh, did I leave it on the orange color? Am I that stupid? Yeah, you are. Dell, shout out to Dell on a monster move. I mean, wow. Let's see if okay, that's pretty cool. We can just immediately do that. Delete that, move that over, move that into there. Wow, we broke a beautiful consolidation box for the report. That's beautiful. That's actually amazing, guys. Here's the previous earnings anchor VWAP. No need to even look at that one. Are we into all-time highs? Wow. What the fuck? How the fuck is Dell in all-time highs, dude? How did that even happen? I don't even remember this happening. Right. All right. Well, Dell's at all-time highs. Now we're looking for longs tomorrow, and any pullbacks into previous all-time highs are clearly bullish. But you want to ask yourself, why are we even pulling back to previous all-time highs of $95, $94, $96? We should not be. So the stock, if it does pull back, needs to find support into 106. If it does pull back even lower than that, I'm guessing it should find support at 100 at the very least. You don't want to see it breaking 100. It's a little bit more psychological level. You don't want to see it breaking 100. Anyone who bought before 100, their stops is probably 100. So if we break 100, you're going to see a lot more flush coming right back into tomorrow's high. So you don't want to see the stock going below 100. But before that, we have 106.50. You can see how it's kind of getting ready to break out over here. I would love for the stock to pull back, hold the earnings anchored VWAP, and then set up for a breakout over here off the open where we can take it through 114. Please God, that looks like boobies. Please God, set up for a nice little breakout over here on the upside for us, so we can have fun with this position. Maybe 114 does come into play for us to play, but right now we will put in 113.34 as resistance. We're gonna put in 110. 109.77 is where earnings VWAP is. I'm gonna put in 110 as the inflection to see what happens over here. Like baby. I like that. Like baby. Dun 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 dun. Now you got the song stuck in my head, dude. Yeah, answer your mom's text message. Come on, answer your mom's text message. She said, hit that like and subscribe on TraderPrad stream. Hit that like, hit that subscribe. Dieter, are you here? Dieter asked for Autodesk today. What was my opinion? What was your question, Dieter? Let's see what Dieter's question is. In the meantime, I'm gonna wipe out most of my charts over here, because I wish I had some time to chart on my own time, so I don't have to waste your time over here doing this stuff, chat. I apologize, but hey, now you get to see how some of my process works, right? Now you get to see how some of my processes are, and don't steal them. Don't steal them, and don't tell it to other people, okay? Don't tell it to other people. Shh. It's a secret. Secret just for you and me. Yesterday's high, yesterday's low, And I'm going to go back to seeing Dieter's question now. Where's Dieter? Dieter coming in with the question. He said, thoughts on Autodesk earning? Do you think it's a good swing for Adobe earnings? What? Autodesk and Adobe aren't even the same thing. What are you smoking? Autodesk and Adobe aren't even the same thing. I guess they're both software. I guess they're not even the same thing, dude. I don't know. I don't think they correlate in any shape or form. You know, I guess it's design software, yes, but people who are using Autodesk are doing it to build houses and like bridges and like dams. The people who are using Photoshop are idiots like me. It's not the same thing. Autodesk is more for like, you know, it is a technology space, it is a software space, but it's not. I don't know. I'm kind of debating myself even talking about it right now. I'm kind of debating myself, like, is this an Adobe play? Chat, is this an Adobe play? I don't know, dude. I mean, one way to find out. Let's compare it. That does not look like an Adobe play. I guess this is because Adobe's earnings came out and it dropped. Or did it drop? Or Adobe's earnings did not come out? I forget. But let's zoom out a little bit more. Okay, that looks like an Adobe play to me. Okay, that looks like an Adobe play to me. Maybe we take that back, chat. Maybe we are wrong. Adobe is 14th March. Okay. I mean, that's pretty damn close. But this could also be the market. Yeah, you know what I mean? It could also be the market. You could say it's Adobe and it's Autodesk, but you could also say it's just the overall market. So I don't really know. I don't really know if you want to call it that. Overall, if we just isolate each company to themselves, you said Adobe is on 14th of March. Just wait for Adobe. I don't think you want to. I mean, it's up to you. It's up to you. I don't want to tell you what to do. I don't want to tell you what to do. It's up to you. I think I don't want to like tell anybody to YOLO gamble one company off of another company unless they're two of the exact same companies. Unless like it's Photoshop and it was a Photoshop rival like online Pixar or something. It's called Pixel R or something like that. So if it's not like something similar to that, then I probably wouldn't compare it like that. It's like FISKER and Rivian, right? They're the same companies. They're the same automotive companies. But then if you bring in Tesla, yeah, Tesla is kind of the same thing, but Tesla also does a lot more than just cars. They are a technology space. They are a solar space. They are a robot space. So it's a lot more than just cars on Tesla, right? So it's part of that over there. In my opinion, I'm kind of having that debate in my head when it comes to that. But let's talk about Autodesk just for their earnings report over here. It's 43 minutes in and we only talk about 3 stocks so far. Amazing. Whoa, monster move over here on ADBE, chat. Big move on ADBE, and I guess, you know, this is why Dieter, we're well above that 269. I like it. Well above that 269. I guess this is why Dieter's asking, because he wants to front run the book a little bit. You greedy bastard. He wants to front run the book a little bit so he can, you know, make more profits when the report goes up. Honestly, Dieter, it might not be a bad idea, bro. It might not be a bad idea. I will give you that. And the reason why I'm saying that is because if you do get it off of this stock's sympathy, and if it does sympathize off of the stock and go up, when the report comes out and the report's bad, it probably only comes back down to your break even and you get out at break even. That's not bad, right? You get to ride for free. You get to go on Disney Six Flags ride for free and enjoy it for a bit. But if it ends up being good, that might be a monster trade for you. So it might not be a bad call, but I would not bet the whole account on there, because imagine if it doesn't fill you on the way down and you don't get a chance to get out for break even and you go bankrupt. So I would not go like YOLO dolo on that one. But you know, it does not look like a bad idea. You know, if it is a sympathy trade, you are kind of just sympathizing with QQQ in my opinion. But if it is a sympathy trade, then if the report comes bad when it does, you should be able to get out for break even in my opinion. So I think you're kind of not that far out on a good idea over there. Hopefully it pays out for you. But here's the stock. Here's the levels that I'm kind of interested in over here on ADSK Autodesk. Ooh, look at that. We love it. That's actually very close to that level. 285.38. Where does that level come from? 285.38. It is that little consolidation. How long did we consolidate there? Almost about a week or so. No, that's about a month, Brad. What are you talking about? Each candle is a day. Almost about a month over there consolidated. So that high coming into play, and if we break out of that high, I think we got a beautiful move into 303. But the dislocation off price today is pretty crazy. I mean, going from here to here, that's a monster move. 10% move, about $28 of a move for a stock whose ATR is $5. It'll be hard to expect the stock going higher than where we are right now. So let's put in that number as a resistance. 285 to 285.38 to 280. Why is my niece going crazy right now, dog? 285 to 285.30. You can kind of just say 285.50, honestly, because if you're going short 285 and you're not giving the stop up to 285.50, you're a moron. You're an absolute moron for that, period. Apple 176 to 178 key area. You are correct, because we're breaking under 179 tomorrow and most likely breaking down. So if we break 179, we got to go down at least $3, and that's 176, baby. At least $3. What's the ATR for Apple? $3. Exactly, 305. 305. Hey, shout out to 305, Mr. Miami himself. Laced up souls. Where you at, bro? He's probably busy taking care of his kids right now. Resistances 285 to 285.50. The supports 270. Looks like 269.50 to 270. But before that, what did the earnings move look like? Why? Yeah, I mean, no volume really in the after hours. Barely any volume on Autodesk, I guess, because it's an expensive stock and the spread's ugly. But my support came in exactly where I was going to put in, right in front of that 270, 269.50. Earnings anchored VWAP at 273. Most likely going to be ending up at 275. So waiting to see what happens at 275 on Autodesk, and the support 270 to 269.50, 269.50, and under 269.50, you're basically waiting for 260 to come into play, which will be yesterday's high. I'm not doing with anything under 269.50. If we do get under there, it's like, whoa, what happened with this report? The report looked bullish, the move looked bullish, but the stock completely said goodbye and came right back. So that's not exactly what you want to see if you're looking for the longs. And right now we are very much so looking for the longs on the stock. That's not the one I want to delete. F off. Get away from me. That's the one I want to delete. Thank you. Click on that. November 23. I'm just guessing it's November actually, but it should be November. November 23 over there for that one. For this one, Feb 24. And then let's actually go confirm that it's the November 23rd one. Zoom out. That is on the November of 2023. Awesome. Coming back to these charts, get rid of these lines. Get away from me. Get away from me. The stock, however, we just saw on a quick glance that it did kind of have a choppy move and ended up to the downside eventually. So it looks like the earnings report actually did not help out the position, even though it says that the report was green. We're going to take a look at the report real quick. Let me just throw in yesterday's high and yesterday's low markers. Yeah, I thought so. Pretty much flat of a report. Not that big of a beat on EPS, and looks like they lost money on revenue. HPE not doing what Dell did at all. So here's an idea for some of you guys that you might not even think about sometimes, which is if the market's going down, the easier trade for you will be shorting HPE. And if the market's going up, the easier trade will be going long down. It will be that simple, because if the market is already showing you that they don't like something from a specific stock, and the market overall is going to the downside, this one just should get like pummeled to the downside and plummeted. Simple. And if the market's going up, this one might end up fighting the move to the downside a little bit, even though it has its own little catalyst. It might fight the move a little bit, might have a little bit of a resistance for that, but you will still might be end up getting a little bit of a profit off it. Right now, I'm having struggle kind of looking at seeing what happened over here in the after hours. I don't like how it popped. That pop kind of showing you that there's buyers here. That pop showing you there's buyers here, and the buyers are stepping up. However, we are under one of the more recent lows that we just put into this chart, which is around, what is that low? Around $14.70. We're right around that $14.70, I think. Yeah, right below that $14.70. We broke under it, popped back, got back under $14.70, and now kind of holding this. Is that 14 exactly? 420. Someone put that order on purpose there. Let's be real. HPE though, yeah, waiting to see what this one does in pre-market. I guess I'm not even really worried about trading HPE tomorrow, to be honest with you. We'll just have to wait and see if it does something fun in pre-market, and then if it does, we can take a look at this position. Plug Power, we do know that this one has broken down to a new all-time low not too long ago, if I remember correctly. Let's zoom out. Yeah, so, oh no, not new all-time low, new 52-week low. New all-time low was around pennies, I guess. I don't remember that, but I guess I wasn't alive for that. How long has the stock even been here? 2000. Okay, I was alive for that for sure. I was alive for that, but I wasn't a trader back then. This stock is right near all-time lows still, not really doing anything. The report comes out tomorrow. It's a 50 million share stock, so it does move around pretty decently with volume, but it's a 17-cent spread, not spread, sorry, 17-cent ATR, so not really that interested to trade a stock. If you don't even have a 50-cent ATR, it's like, oh man, do I really want to even touch you? So I don't really care about what Plug Power does unless it brings in some crazy move tomorrow. Then we can kind of talk about it. Here's CELH. Boy, oh boy, look at that candle. When has the stock ever had a candle like that? I don't think ever. I mean, that's a monster breakout over there. At first, on the earnings report, it looked like it was going to struggle. It breaks out, pulls back, struggles, and then off the open just rips up to the north side. Average volume is 5 million shares. Today, we do 31 million shares. Like, that's insanity. So, monster moves over here on CELH, and we want to see how we can capitalize on this trade tomorrow. We're going to begin with putting in the earnings. That's not the one, Prad. We're going to put in the earnings anchored VWAP to begin with. Feb 24. Sadly, February's over. Today's the end of the leap year, and March starts tomorrow, ladies and gentlemen. March, midi-March. That's the high of today, so let's put in the marker for today's high. Do I even need to put in the marker for today's low? I don't think I do. I mean, I don't think today's low should come into play based on how the stock reacted today. Let's be real. But I do think that the stock should not take out yesterday's high at all, which would be today's high actually. So the stock should not take out today's high. If it does, maybe it just does to kind of trap some people and more enter long, and some stops get burnt out, so the short stops get burnt out, and then it should reverse right back. This is way too much of a move for a stock like this to not reverse a little bit, in my opinion. So watch out for CELH to come back down. $82 is crazy, man. 82.75 to 83 is what we're going to be watching for this stock. Hopefully gives us a monster short opportunity tomorrow, and this one's actually a very, very high important, very, very high priority for me to see what the stock does. Inflection will be somewhere around that $80 area. You can see how we create a little bit of a consolidation into 80, and then we bounce right off of 80. So that $80 area is a little bit of importance to me. We're also right around 80 into where the 150 period EMA is. So I'm going to watch how the 80 behaves. And as for supports, you're kind of watching this opening range high, which is also where the VWAP is for today, which is also where the earnings VWAP is. So you're watching that opening range high right into $78, $77.85. My stomach is rumbling. I'm hungry. $77.85 to $78 over here on CELH. Boy, I'm so excited to see how this stock sets up. I think there'll be a monster short opportunity on CELH tomorrow, and I can't wait for it. Here's Best Buy. Best Buy did announce earnings today. Looks like it was a green report. They moved to the upside to begin with, but eventually did flush back down, sadly. So what happened over there, Best Buy? How come you gave up the ghost? Sadly, moving right back down to south side. Let's delete some of my indicators that I don't want anymore. Not indicators, but some of my lines, because I don't really use these ones anymore. I changed the styling. Cancel, boy. Get out my face. All right. Big move down. Basically closed the gap. And maybe we are able to find support right off of today's low after closing said gap. And we're, what the hell? And we're able to move back up to the north side and give us a chance to get long. I would love to see if the stock can pull back into today's low, find some buying right back into these areas, reclaim the 2-day VWAP, get back into yesterday's anchor VWAP, possibly finding a little bit of a rejection here, and then manage to move right back to the north side. Would love it. I don't think we see a whole range move tomorrow, but even a half range move and then kind of ending closer to the high a day would be a nice long opportunity. So watching that $80 area, which was also previous day's high. Yeah, previous day's high, basically closing the gap over here. Nice level 80. I think 80 also behaves as an inflection point on Best Buy. So watching Best Buy, I think I'll keep Best Buy as a little bit of a more important stock for me, because if it does hold 80, I think we got a clean long with really tight risk to reward tomorrow, all the way back into $83 in my opinion. The stock's ATR, however, is only $2, but I think we can get a nice move back into $82.50 to $83 over here on Best Buy. Now, going into a little bit more fun stocks for us, which are CRM and Snowflake. We told you CRM would go right back through yesterday's high and rip through it. That report was monstrous. CRM also announced that they have a new dividend coming out of 40 cents per share. So more of a reason to buy up the stock if you never bought it before. They're going through, I think, the 52-week high. Let me correct myself before I say all-time high. They are setting up for the all-time high. I can't keep with so many stocks on my watch list, guys. Oh. God damn it, stop drawing lines on your chart. Oh. I guess we'll see what happens. I mean, I want to be involved in this. It would be idiotic to not be involved in this. CRM, I'm telling you, that report was monstrous. Amazing report. Dividend coming in, and this stock is getting ready to break all-time high. If the market goes up tomorrow, I think I said the same thing about a stock yesterday. If the market goes up tomorrow, the stock will break through all-time high, and I think I said that about AMD, and I wonder what happened, with that one. Right? So watch out for CRM. I think the market goes up tomorrow. CRM does some monstrous moves tomorrow. Watch this one with a $7 ATR. Oh, you can see the smile on my face. I can't wait for tomorrow now. Bring me 9:30 already. Put me back in the market. Put me back in the market, coach. Put me back in the market, chief. CRM. Oh, I thought I heard like a crying noise. I thought that my speakers it was coming out of my speakers. I was like, what the hell was that? I think it was somebody else though. CRM. I'm looking for supports or other interesting levels that I might need to keep on watch. We'll go to the quickly 60-minute time zone, turn off extended hours, and then see how it did in the regular trading hours. Honestly, I don't really want to make a decision until 311 or 300. I'll say 305, I guess. 305. Yeah, I don't really want to make a decision until 305 or 312, 311.75. So I think I'm staying away on that side. Yeah, we'll see what happens on CRM into those two prices. Snowflake did recover quite a bit, not exactly how much we thought it would do. I thought it would go a little bit higher, back into at least $200. So I guess the report was a little bit heavy for the stock. We were rejecting right into that after our little sell-off again that we kind of ticked off of. However, we did reclaim that 180 that I kept talking about. I told you that 180 level is going to be very important, and it'll be more important as to what the stock does in pre-market for us. So it did perfectly what we wanted it to do. Didn't break this 170 low, consolidated slightly below 180, and then later on off the open basically traded between 180 and 188. Actually hit 190, surprisingly enough. Yeah, hit 190. So shout out to that. Gave you a nice little $10 ATR for a stock whose ATR is $11.31. So not bad at all. Beautiful ATR coming in. I think a breakout of 190 could be something to keep an eye out for a bigger move to the north side. Something to keep an eye out for also is a 180 breakdown to the south side, possibly takes us back into 170. So you're basically looking at a nice $10 range. The range might just be stuck tomorrow too, and honestly the stock is not even that high of importance for me. I think there's the stocks that we just found not too long ago, CELH, Best Buy, and CRM might be the only 3 stocks that we care about tomorrow, and none of the other ones really should matter in my opinion. Maybe Autodesk a little bit, but these 3 are going to be the highlight of the day tomorrow in my opinion. Ani saying good night. I'm out of here, Prad. Gotta get some stuff done. Good stream, says Ani. Thank you, Ani. Have a good night. I will catch you next time. Well, I'll catch you on Discord when I'm writing my essays. Okay? So when I write my essay, and trust me, you will see an essay today. Once I disseminate this guy's information a little bit more and kind of put him out on blast, you will see me. I'll let it go. I'll let it go. I'll let it go. Let it go. Let it go. All right, good night, Ani. I'll see you next time. All right, Mara after Snowflake. Mara, I mean, pretty bad move over here on the earnings report. I guess Bitcoin is a little bit to blame. BTC USD kind of teetering around that 60K still. So not really too much of a good news for Coinbase and Bitcoin sector in general. And that the earnings report, which we thought was bullish, the report clearly does not matter for the market. The market still wants to flush the stock to the downside today, and they did so very easily, right back into this level of $24 coming into play most likely. So watch out for Mara. I think Mara is not really that high of importance to me, so I'm gonna walk away from Mara. See if Unity is setting up for anything. Not really, but let's go back to Mara real quick so I can kind of move over some of my indicators. So that's yesterday's low, that's yesterday's high. Oh sorry, I screwed that up, didn't I? So let me go here real quick, move this bad boy over, move that bad boy over, and we're good to go. Next one was Unity. Unity, however, I don't really see a play, guys. I mean, I don't really see a play here. Why am I still charting it after I said I don't see a play? Yeah, I don't really see a play on Unity. Zoom. Okay. Zoom doing what we wanted to do. Exactly what we wanted to do. That's pretty good. So Zoom kind of broke out of today's high and wants to go to the higher side. That's exactly what we wanted to do. We wanted to see that $70 area come into play. So shout out to Zoom. Maybe we do watch this one for tomorrow. If we are able to break through that 71.50, we got a lot of room to the upside for us to play with. Now, this is obviously not day 1 of earnings. That was day 1, day 2, day 3. So we're going into day 4. That could show a little bit of a resistance, or we could break out of that and start marching higher. So let's see what happens on Zoom at those prices. Ani says, everyone like and subscribe. Thank you, Ani. You're the best. Ani, you're the best. Resistance 71.50. Let's see what happens over there. And if we are not able to march through that, I just don't want to touch the stock. What about AI? Good call. How can I forget about AI? I forgot about AI. Don't even have it on my watch list. You know what? Honestly, going through all these other stocks right now on my watch list, I don't even want to talk about them. Most of these stocks look useless. We do have Okta today, which actually might be a little bit of an interesting stock. Yeah, I don't really want to talk about Okta. Square 81.50, kind of getting ready to set up for another breakout over here. I mean, if you go on the daily chart, Square is looking like we are going to have some fun very soon. So waiting to see what happens over here, going into 83 and maybe even higher than 83. Watching Square without a doubt. AMD, without a doubt, that one. I mean, a new all-time high coming into play. Finally, after all this begging, we got that move from AMD. Let's go. Trying to get that marker. Hello, there we go. Finally got the marker. Trying to get this one, move that one in there. All these lines that I started putting into this chart today because I was trading it so much. There we go. So here's the levels from today. Today's high, today's low. Oh, I did it. Today's low too. Nice support came in exactly at the previous all-time high, right into 185s. Also right into where today's VWAP was. Some monster support comes in over there, eventually going into 198 over here in the after hours. I mean, are we seeing 200 tomorrow on AMD? That would be something monstrous to keep an eye out for. And if AMD is making that move, I think Nvidia starts making a move back above 800 most likely. So watch out for Nvidia catching some traction along with AMD to the north side. Micron possibly getting ready to heat up again. Micron did look like it was going to struggle today. I got short right there at the low of the day today, and I got stopped out once it got back above today's VWAP, and I lost a little bit on that trade. But I failed to flip long. I did not actually recognize that it was giving me chances to get long, and I failed the opportunity to flip long and look for that move back up. But I guess with the help of AMD and even with the help of Nvidia, maybe we do get an opportunity on Micron over here. And last but not least, not the same sector, but a stock that did report earnings today, C3 AI moving to the north side, monster move over here. It was a little choppy. I will tell you that it was not the cleanest stock for it to trade. It was very, very choppy. You had to battle this position, and now it did end up being my third best trade on the day, but that's only because I was able to, you know, kind of get long in this area and have a ride through that over here. You know what, maybe just let me show you the chart. Let me just show you the chart. Don't worry about it. Don't worry about it. That is not the chart. That is not the chart. That is the chart. Oh, was it number 3? Did I say number 3 or 4? Forget if I said number 3 or number 4. So there you go. I got long on the opening drive through 36, got some out, got stopped out, got back into the trade, added over here, got back, got out, then I got back into the trade, got chopped up a bit, then later on in the day took that breakout, and this was where most of my money was made. That was a little bit win, that was a little bit of a loss. This is where most of my money was made on AI today. My third best trade on the day today. Shout out to C3 AI. But you know, the way that it traded today was so choppy. Like, you had no clear moves. Like, for example, if you put a stop over here, you got burnt out, right? If you put a stop at the low of day, you got absolutely tricked out. You would have had to put a stop at maybe 34. Even that got tricked out, right? And let's say afterwards it comes back and you start positioning, re-enter the position when it comes back through this area, and then you start adding to your position somewhere here, and then you start trailing your position back. You got tricked out. You get tricked out. It just does it so many times. And even for the shorts, for example, if you were short after all this move, you see this fail coming in, you're short, and then you put a stop somewhere here or something, you get screwed on that one. I think shorts were a little bit cleaner though now that I'm watching. But at the end of the day, there was a big seller. I was watching the tape, I was looking at the moves. There was a big seller and there was a big buyer just fighting each other, and a big war happening. It was almost like it was like watching the Battle of Normandy or some shit. It was insane. It was a movie. It was a movie to watch, because every time it would go up, it would get smacked down instantly. There was a point where we were looking for the breakout right here. We being me and my friend Dallas on the trading floor. We were looking for this breakout over here of 3750. 3750 also had 1,000 lots. 1,000 lots being 1,000 times 100. So that's how much size of AI was sitting at 3750. But every time we go there, we were struggling. And on that candle right there, instantly flushes down 70 cents. I'll show you on the 1 minute into that candle. Instantly flushes 70 cents, and we were like, whoa, what the hell happened there? So we were watching like this movie play out every time. We go up, bang, gets dropped down. We go up, bang, gets dropped down. We go up. It's like the seller was so aggressive. Now, we don't know if the seller is a short seller or a profit taker. We don't know all that information. All we know is the seller was being so aggressive, especially right here. Look how aggressive they were to the downside. Look how aggressive they were. Look how aggressive they were. But at the same time, their aggressiveness brought in more buyers, because buyers were just fighting them the whole time, and they eventually ended up being victorious, exhausting the seller. The seller did look like they came back in, because they were able to bully right back to the south side, because if the seller did not bully it back down, the buyers should have been able to push the stock all the way into at least $39. So they did not manage to do that, and the stock only ended up being positive only 24%. Meta looks like it's about to break out. Let's go take a look at Meta real quick. I think, yeah, the 494 is the level on Meta now, not 490. You're watching the 494.30, 494.50 on Meta. So watch out how that level sets up, obviously. Let me just put it in my notes over here. Hello? Journal? Oh, not journal. Daily watch list. What the fuck are you doing? Daily watch list. Open up tomorrow's date. Okay, you've done this before, buddy. Come on. Stop brain farting. So Meta, I mean, obviously you're watching that 490, 450 area on Meta to the upside. I don't really care about Microsoft, really. Nvidia, I mean, 800 might be something to keep an eye out for. But I think, you know, if Nvidia starts going through 800, you might not even have a chance to get long. You might have to look for a stock to pull back into 800 and hold 800. So we'll see how the stock sets up in pre-market. Amazon, is it getting ready for a breakout? Ooh, it did break out. Damn it, I didn't watch Amazon today at all. It did break out. So Amazon's got a new high coming in, new 52-week high on Amazon at $177. Looks like Amazon's getting ready for that bigger move up north. Watch for this one taking off tomorrow with the market moving up too. That's what the, oh yeah, that's the market on close nonsense. Nah, I don't think Amazon's going any more higher. Nah, that's market on close nonsense. I'm not buying this. I mean, it did break out though, and it did get added to the Dow Jones Industrial recently. So the MSCI rebalanced them quite a bit, looks like. MSCI rebalanced them quite a bit today. MSCI probably added them to their index a little bit more. And everyone who promises to track Dow Jones Industrial probably had to buy it too, so they probably bought it today. Yeah, I'm not really sure what to do with that going into end of day pop on Amazon, but that's a monster pop going into end of day on Amazon. That's about a $2 pop. What the fuck? What the fuck? How come nobody saw this today on Amazon? I guess, yeah, because we don't really trade NASDAQ and New York stocks. Sorry, NASDAQ into close as much. But that's a monster move on Amazon. That's insane. I'm just going to take a quick screenshot over here for my friends. Give me a second, guys. I'm going to put some emojis. Yeah. Okay, yeah, monster move on Amazon over here. Wait a minute, where did my watermark go? Settings, turn on watermark so we can show you guys what the name of the stock is. Monster move into the close. I'm not really sure what to do with that information. If you ask me, I think that's a little fugazi. It's markets are being rebalanced. That's not a substantial enough information for me to get long. I want to see more buyers coming in along with that information to go long. Usually on the after rebalance day, you see the stocks go back down. So that's why I'm a little cautious over here. I don't even want to give you a long thesis off the setup, but if you are seeing buyers step in and they are able to punch through 177, 177.20, then I mean you kind of have to go long without even thinking twice. So watch what happens into this 177 area on Amazon to the north side. I'm gonna put that on my inflection over here for AMZN. Apple 180 came back as support, and we actually managed to close above 180. This previous low 179.34. Looks like if 179 breaks on Apple, we are easily going to the downside. I no longer want to use 180 as a support anymore. I kind of want to see what happens into 179 now on Apple, and if we break 179, sadly, tata goodbye comes in for the stock to the downside, and we're getting free fall. Obviously, if the market goes free fall tomorrow, then this stock is most likely number one priority to the short side to me, in my opinion. So number one priority short side, if the market's going down, is most likely Apple going below 179. You get a nice $3 move through that, and you enjoy the profits. Nvidia, watching to see what happens over here into why did I say 380 into 800 and 823. Tesla had the exact same range as yesterday, and I only know that because I traded it. It had the exact same as range as yesterday. It rejected yesterday's high, bounced off of yesterday's low. So Tesla over here possibly creating a little bit of a consolidation for us to deal with, and then eventually break out of said consolidation. So watch out for TSLA. Nice little move at the end of the day. I mean, it gave you chances to get long, it gave you chances to get short, so no complaints. It bounced to the penny from yesterday's low and bounced to the penny from yesterday's high, so it was a beautiful move at the end of the day, and all you had to do was just kind of follow the flow. I kind of screwed it up for myself though. I tried to go long here, I lost. At the end of the day, I did cast the long from yesterday's low, and I kind of got out into this 201 area, so shout out for that nice little long on TSLA for myself. Helped me stay a little bit green, but that loss on Tesla already didn't really allow me to turn the stock into too much of a green side. I think I ended up flat-ish on the stock, but a little bit red, but mostly flat. Better than being big time red on the stock, right? Better than being big time red. QQQ monster move back up to the north side today. Markets did end up a little bit to the upside too. Let's quickly move in some of my markers over here on the QQQ. I mean, do I need to? Yeah, screw it, do it. Okay, that's gonna be annoying. I'll do it later. I'll just worry about all that number stuff later. Looking at my watch just to see if any important stock I'm missing out. We talked about most of them. Microsoft, I don't really care about that one. Square, nah. I mean, there's better stocks tomorrow than Square in my opinion. I don't want to waste my time even looking at Square and having that give me some sort of a bias to trade it. So I don't want to look at Square. We got stocks like CRM, CLH, Best Buy, and if they don't end up being a nothing burger, we still got earnings-based stocks such as Autodesk, Dell, Zscaler, SoundHound. I think SoundHound is going to be a monster short tomorrow, so watch out how that stock moves. And the overall market, if the market goes up, we got amazing stocks to go long on, and if the market goes short, we got amazing stocks to go short on. That's what you basically want to do as a day trader. Even if you're a swing trader, that's what you want to look for. You want to look to create scenarios that you can be involved in and make theses for it. You know, what if this happens? What do you want to do, and how are you going to react to it? What exactly are you going to do with your size? How are you going to take profits? If you don't have a plan, you're just going to be you know, going with the wind and just flowing around with the wind and just randomly making them decisions. One of the more really good quotes that I read today from one of my buddies was you are only as good as the plan that you follow, or something along those words. Let me see if I can actually find that quote on Discord right quick. Let me go to my friend's thing over here. The only thing that defines you is your ability to follow your plan. That's amazing. That sentence right there is amazing. You know, if you don't have a plan to begin with, then you're literally gambling. You're gambling. You don't have a plan. You're just randomly buying positions and throwing the dice, and sometimes you get lucky. You know, the people in the casino make money. You get lucky, but you keep doing that for a long run, and we'll see how long you continue to stay lucky in the game and how long you continue to be in this game, right? That's not how things work out. If it did, then everyone would be doing it. The risk management thing is so important. So we're watching to see what happens over here overall on all that fun stuff. What about AI? Still move up. Meta looks like it's about to break. We talked about all the fun stuff too. What are we missing out, chat? Am I missing out something? Right, economic calendar. We're forgetting the econ calendar, chat. Econ calendar. Econ calendar tomorrow. What does it look like? Ooh, global U.S. manufacturing PMI 945 during market hours. Okay. ISM number 10 o'clock. Okay. Michigan inflection 10 o'clock. Okay. Market movement tomorrow. Okay. We're getting a move tomorrow without a doubt, ladies and gentlemen. I mean, QQQ is pretty much into all-time highs. If the market breaks out tomorrow, we're gonna have some fun. If the market rejects all-time highs, then we're probably not gonna have fun if the market rejects all-time high. Let's be real, right, chat? Probably not gonna have fun if the market rejects all-time high. Fed Logan is coming up at 10:15 along with Fed Waller. They're both gonna be talking at the same time. They're gonna be How is that gonna be working? 12:15 comes out Fed member Bostic, so he's gonna be on the mic also. We got more Fed members coming on later on in the day at 1:30. Daly comes into on the microphone over there. But here's the most important time period off the open for you opening drive traders: 9:45 and then 10 a.m. Very, very important time periods. Make sure that if you are in positions, be a little bit careful and use stops at the very least. Those times. If you don't use stops most of the times, well, I'm not gonna judge you on that, but at the very least use stops at that time or you're gonna get probably destroyed, so be careful for that one. Anything else that I need to think about for the market tomorrow? I mean, IPO calendar is still very, very dead. Nothing really going on in the IPO calendar over there. Let's go take a look at the market breadth real quick. Looks like 247 stocks were up 4% today. Shout out to 247 stocks, but recently we had 435 stocks. That's crazy. So pretty good move to the market upside overall. Number of stocks up 50% in a month. 53 stocks. Okay. Number of common stock universe. What does that even mean? What pop on scanner today? Oh, that's a good thing to talk about. Yeah, let's go see what stocks came up on the scanner today. I think the scanner was a little meh today. Meh. Whatever. Oh, I also want to show you this. Today, I found a way to put orders through simulated platform. Oh my god, no way. Don't tell me I'm getting dicked on right now. No way. No way. Stop it. Am I losing money on this trade? Stop it, dude. Ow. Oh well, the contest is over anyways. Who cares? The contest is over anyways. Who cares? Okay, let's go to show you what I was going to show. Today, the opening range breakout strategy was absolutely atrocious. Like, we got destroyed on the simulated account. I'm running... oh, what? At some point, they were all in the money. But the algo actually didn't take profits. Like, at some point, this stock was at $100 in the money and we ended down $192. How the hell is that even possible? Why did the algo not take profits? So we're short, it goes down, it comes back, and we punch out all the way up here. Why did we not take profits here, algo? What's wrong with you? What the hell? Okay, what's going on with this stock over here? Google. We went long on Google. Yo, what's wrong with this algo? This algo is greedy, bro. At least it got stopped out right into the low of day. That's amazing. Before the move came back. Awesome. But this algo sucks. Let's go see the winners, I guess. Let's go see the winner. You bought it here and you sold it there? That's pretty good. Why didn't you do that for other stocks? What the hell is wrong with you? Why didn't you do that for other stocks? Okay, at least you made $200 over there on $280. No, you made... yeah, $280 on Airbnb. Nice. Zscaler short. Wow. Okay. Short Zscaler. Where's the profit? Oh no, that you bought Zscaler and you sold it there. You were out of the money for quite a bit, buddy. You were out of the money for quite a bit there, bud. Holy. Yeah, but you guys see what I'm doing. I'm basically testing opening range breakout strategy over here. Once this gets good enough, I want to plug it into like a trading account and see how the trading account goes. But let's go talk about the gap give Bella scalp setup over here. Did we have any stocks today? No long trades. We had one short trade apparently, and that was a banger. Actually, I traded the stock on my account. I actually traded this on my account. I got short right here, and I got short right there, and I got out right there, which was a pretty good trade for me, I guess, overall. But it was way too slow for me to manage this stock. And yeah, it was a pretty good trade at the end of the day. Let me show you what it looks like. DV, you'll see the line on the intraday chart for me. There you go. There's the Bella scalp line. Bang. The line comes in, the stock breaks, pulls back, rejects VWAP. This is exactly where I got short, and then I got out on that move to the downside. That I felt like that move to the downside was the ding dinner's done, and we kind of double bottomed here, and it kind of popped right back up. So actually on that green candle or yellow candle, which is what you see, it's supposed to be a green candle. On that green candle, I punch out of my position. But if I wait for the stock to close above the 9 bar or the 2 bar or whatever, it actually never does, and it continues going back down and struggles over here. So pretty good short. Bella scalp coming in and helping me out. That's the only trade, sadly, on that scanner. This is the opening range. This is the Bella scalp. Yeah, it's the only one on that scanner. Shout out to Trade Ideas. If you are interested in Trade Ideas, go check out the link below in the description to get 15% off with code PRAD15. All right, ladies and gentlemen, that should be the end of the day today, mostly, because I don't have anything else to talk about unless we have a YouTube video to watch. You guys want to watch a YouTube video? You guys want to watch a YouTube video together? Also, at the end of the streams, I always raid our friends over at how many people are here right now? 10 people. Yay. Make sure to hit the like and subscribe. At the end of the stream, we always raid our friends over at Think with Bookmap. So if you are in the stream for that, please help me out by hitting the like and subscribe on their channel too, and put in that you are part of the TraderPrad raid. Just put in TraderPrad raid in the chat when the raid happens. But we're not going to do the raid right now. We're going to actually go find some video to watch from S&B Capital, if there is one. Not about options. Come on, don't tell me it's about options. Swing trading, options, ultimate swing trading guide, swing trading, options, more swing trading, more options. All right, nothing for us, I guess. More options, more swing trading, more options, more swing trading. Nothing really for prop trading and nothing really for day trading, I guess. Sadly, it's an options market these days, ladies and gentlemen. People are trading more options, and that's the more go-to market these days. I think there was one video that I wanted to watch today. I don't know if I saved it somewhere. I'm gonna try and see if I can find it real quick for us. Let me see if I can go here. Maybe I do this on full cam face. That way I don't dox myself. Give me a second. Go to history. Where's history? How you guys doing? You guys enjoying your day? You guys enjoying the stream? Did you guys have a good day today? Put in the chat. Put in the chat. You know, I want to have a fun stream. I want to have a stream where we talk about all things and not just trading. It's like we're friends. We're hanging out. We're having a conversation. You know, we're just talking about how your day went, how my day went, and at the same time, we're trying to keep it educational and all that fun stuff. How'd you do? You talked to your girl today? You talked to your mom today? You give your mom a hug? You give your dad a hug? Let your dad know TraderPrad says hello. Let your wife say, nah, she don't. I won't bring your wife's name. Don't worry. I won't bring your wife's name. I don't want to get slapped up. Keep my wife's name out your mouth. Okay? You don't ever want to get slapped up. But you know what I mean? Just showing love to you and your family. How you guys doing? How you guys doing? Good, says chat. I like it. Let's get to this video over here. I finally did find it. Fair value gap simplified. It's about a 14-minute video. Smart money course by this channel called Smart Risk. I actually found this channel today. I want to watch this video at the moment, see what happens. My 3 favorite channels: Smart Risk, Stock Brother, and How Money Works. Makes my week complete. Really. I watched 3 of your videos, went straight to my chart, and everything started making sense. You're giving what others will charge for free. Hey, I do that too, bro. What the hell? I stream every single day. The only stock channel I believe in. Wow, a lot of good comments over here. Okay, a lot of great comments coming in from this channel. So let's go find out what's going on over here. I'm back. I need background noise. Might as well have you. Yeah. Good night, guys. I'll see you guys tomorrow. She said, might as well have me yapping, not saying, might as well have the pleasure of listening to you instead of a TV show or a YouTube video. She said, yapping, guys. That hurt. That hurt. All right, let's come back to the video over here anyways that we were going to watch right now. Thank you, Japanese lo-fi radio without copyright music. You lied to me yesterday, however, because one of your songs did get flagged as copyright, and now that video is no longer monetized. So thank you for that one. But let's come back to the fun parts over here on the learning new stuff. We saw a video yesterday on something called pyramiding into size, how to get into more size and how to make sure that doesn't hurt you. Pyramiding into size. And if for those of you who didn't watch it from last night's stream, I'm actually going to clip it and post it as its own separate video, so you guys can anytime go watch the react videos and so on to kind of only see that part of the video and not have to see the whole watch list stuff of the video and the stream and so on. I'll do the same thing for this one too, in case you do have to kind of call it a night, go to bed or whatever it is. But for those of you who are here and want to hang out, we're gonna watch this video right now. Fair value gap simplified by Smart Money course. I hope that they are not gonna copyright strike me. If you are watching the Smart Money Risk, I doubt it you are, but if you are, we're only using this for educational purposes. We're not using this to steal your content. Okay, promise me. I trust you. I promise you. I went from going to saying trust me to I promise you to, I said it such a weird way, but I promise you we're only using this for educational purposes, not copyright purposes. YouTube, I'm saying that to you. Stop blocking my stuff. Okay? They're blocking my stuff to like real random states and so on. It's so weird. Okay, let's watch this stuff, guys.
To another episode of Smart Risk. Trading without the skill to identify proper and high-quality fair value gaps can be extremely risky and may result in significant losses.
It sounds like AI voice, bro.
Often overlooked by many, represent the footprint of institutional money in the market. They play a pivotal role in executing well-informed trading opportunities and are a cornerstone in the strategies of smart money traders. In today's episode, we are diving into various candlestick fair value gap types, the psychology behind them, and the price actions associated with them that you might encounter in the market, from basic to advanced. But that's not all. We'll break down the key criteria and rules that elevate a fair value gap into a winning trade. So traders, if that's something you're interested in, please give this video a thumbs up to show your support, and subscribe to our channel if you are new.
Hemi or Beamer or Rice Burner? What the hell is that, bro? Oh my god, that's so loud in my ears. Oh my god, that was so freaking loud.
Welcome back, traders. So let's get started. Before diving into the basic and advanced features of the fair value gaps, let's have a quick breakdown of market sentiment and see what is the main factor that fuels the market and what is the major psychology behind the market movement. The dynamics behind market movements can be boiled down to two key factors that consistently influence price direction. The first element is the liquidity zones. Market continually seeks to sweep liquidity to generate momentum. Essentially, liquidity serves as
Is this like a beginner video?
Playing a vital role in the market's overall dynamics and functioning. We have extensively covered how to identify liquidity zones in previous videos, which you can find linked in the description.
Okay.
If you haven't watched it yet, you can easily access it through the description of this video. The second factor is the fair value gaps. The market consistently shows a tendency to fill and rebalance the gaps present within it. If you look at this example, you can notice that the price sharply dropped with inefficiency, leaving a fair value gap behind. Subsequently, the price moved back up and filled the fair value gap. Simultaneously, it also moved upward to clear out external liquidity. Once external liquidity was swept, the price reversed back down to fill the most recent fair value gap. This cyclical pattern reflects how the market operates, where price tends to both clear accumulated
Here comes the TH comments.
and fill fair value gaps.
Here come the
Now
TH
let's continue and
comments.
explore how we can identify fair value
Brace
gaps
for
from the
impact.
candlestick perspective in the market. Fair value gaps are typically formed within a 3-candle sequence and are
Okay.
easily noticeable on the chart as a large candle. The distinguishing feature is that the upper and lower wicks of the neighboring candles do not completely overlap the body of the middle candle. This creates what we call the fair value gap zone, which essentially fills the space between the wicks and is drawn on the body of the middle candle. However, there is an exception in that we must consider a 4-candle sequence to identify a valid fair value gap. When the first candle in a 3-candle sequence is an inside bar candle and forms within the preceding mother candle, it becomes necessary to analyze a 4-candle sequence to accurately identify the valid fair value gap zone. In situations like this, if we do not consider the mother candle when we are drawing the fair value gap on the chart, our identified zone will not be optimized or valid. For example, in this scenario, if we solely focus on this 3-candle sequence to identify the fair value gap without taking into account the presence of this red candle, the identified fair value gap would be incorrect. These concepts are applicable to bearish markets as well. It's important to note that these principles can be applied across various timeframes and any price action-based chart. Now let's see what is the theory behind the fair value gaps.
Bro, you're not using this to trade, man.
Consider a 3-candle sequence as illustrated. Let's say that this bullish candlestick sequence, which
I'm done with this video already, dude. I'm done with this video already, dude. What? What happened to this fair value gap here, bro? Oh, I guess you're gonna say that it got filled over here, huh? Okay, fine. Yeah, it got filled over here. The fair value gap was this, and it came back and it filled it, and then it bounced and it cleared out the excess inventory. Okay, what about this excess inventory over here? Huh? Then what about this excess inventory over here? Yeah, come on, dude. Things like this piss me off.
Created a significant imbalance in the market, occurred in a higher time frame. To analyze this 3-candle sequence from the market structure perspective, let's zoom into a lower time frame.
This is a waste of my time.
Here, we see that the price created a bullish structure similar to the one illustrated. As mentioned earlier, the market consistently shows a tendency to fill and rebalance the gaps present within it. Now let's take a closer look to understand the rationale behind this phenomenon. As you can see, the price created a successive bullish structure to the upside with great momentum, driven by high buying pressure and a lack of sellers in the market. When traders encounter such sharp movements and miss out on a great buying opportunity, they often place their buy limit orders below key zones, such as order blocks and demand areas, hoping that the price will make a deep pullback and activate their orders before resuming its upward movement. This scenario accumulates a lot of pending buy orders.
No. 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 Absolutely not. Yes, there's a chance that it bounces off of here, but you don't just blindly predict that there is pending buy orders there. You wait for the pending buy orders to show up that they are actually buying by looking at the tape, by looking at the time of sales, by looking at the level 2. You confirm it that the last low is being bought, or the buyers are actually buying up before the last low, or the buyers are buying up before the last low into the 9 EMA or the 21 EMA, and then they're actually fighting to go higher. You don't just predict that there's, because when you do that, you get destroyed on stocks like AI, you dummy. Right? You get destroyed on stocks like AI when you do stupid shit like that. You don't just expect that, hey, the opening range 5-minute low, we popped up, we found buyers here. There's gotta be a buyer here. Yeah, right. You instantly lost a whole dollar per share. So that's not how you do that. Like, just guessing and predicting that there's a buyer there just because we made a higher low doesn't mean shit. You don't buy into that area just because of that.
Orders in this area, creating a significant liquidity pool awaiting to be swept by the market inside the fair value gap. So, traders' fair value gaps are filled with many buyer-sell orders, creating a substantial liquidity pool inside the gap. This is the primary reason why the price is likely to return to fill the gaps and then continue its momentum with even greater strength. The presence of these,
there is this hidden rule in the market that gaps always get filled, but calling this a gap is so moronic, dude. This is not a freaking gap. Calling this a gap is so stupid. I guess you're calling it a fair value gap, right? You're kind of working around it by calling it a fair value. This is fair value in quotes. And I don't like that either. If you think about it, the market is not efficient. If it was efficient, the stocks wouldn't move. There's a lot of stocks that don't move because A, one, they don't have volume, and B, they're probably efficient as F. Like Berkshire Hathaway, they only move when like big things happen, but it most of the time doesn't. It's very efficient. That's the way Buffett has it set up. Most of these other stocks are not efficient. That's why they move around with such crazy volatility. And people like me come in and say that doesn't belong there. They go short. People like against me come out, you're an idiot, I'm gonna go long here. And that's why it moves. It's not efficient. If it was efficient, there always would be no movement in the stock. So calling it fair value, there is no fair value, period. The markets move because fair value does not exist. Simply does not exist, period. If you're looking for fair value in the stock, then you're just like, you're not a trader at that point. You're an analyst. You're sitting there analyzing stocks and going, I think it goes to $100, whatever JP Morgan analyst. You don't get paid for doing that. You're a trader. Trade the stock with the variables that the stock is giving you. And this is not it, in my opinion. If you're using that as a reason to go short, and then when it comes here you'll cover and then go long, that's
attracting it back to fill.
Let's see what happens
before resuming its trend. This might provide a great trading opportunity for us.
Let's see if that's not even it. I could be wrong.
If you're curious about how we stay updated on financial news, the best trading detailed 24/7 economic live streams, make sure to check movement.
Make sure to check out their sponsor in the description, guys. Make sure you go check out their sponsor in the description.
In this case, a fair value gap, also known as a liquidity gap, emerges due to the absence of buying pressure spanning across.
Call it a liquidity gap, okay? I understand that. What the fuck you mean by fair value gap,
bro? The identification of the gap is solely based on considering the impulse up or impulse down candle, along with the adjacent candles. Other candles outside this range do not play a role in determining the gap. These pockets of liquidity voids hold significant importance as they can serve as potent entry points due to the market's attraction to liquidity. When the price is inclined to move downward, it aims to clear the potential liquidity zones above it. Consequently, these zones become favorable regions where the price might witness an upward movement, only to eventually fill the gaps and then continue its bearish momentum.
Like I said, there is a hidden rule in the market that gaps always get filled. Sure, there is a hidden rule, but it doesn't mean always. It's not 100%. It's so stupid.
The key factor that we can consider to determine price direction.
So why is just this fair value? Like, just because, you know, you're calling it that high over there and you're calling it this low, this is kind of like looking at it in hindsight too, and you're looking at it on line chart. Give me some real examples on candlesticks, okay? Let's see that. But let's understand the idea here. I'm being way too critical because I just don't like anything that this video is talking about right now. I wanted to learn about this video, but I just don't like anything this video is talking about.
Price enters the fair value gap. If the price respects the fair value gap
and
shows a rejection towards the upside, it suggests that the price will likely aim to move upward to reach the most recent buy-side liquidity, which is accumulated above the recent high. Conversely, if the price does not show a reaction upon reaching the fair value gaps, it indicates that the price is more likely to move downward to target the sell-side liquidity accumulated below the recent low. To solidify our understanding of fair value gaps, let's see how we should identify.
I don't like the whole idea of calling that a gap. Just call it a fair value. We actually talk about this on our prop firm too. Our prop firm, we talk about, you know, looking at the midpoint of one whole move. So if the stock, forgetting about that whole construct of, you know, calling this a gap, forget about that. Just kind of look at the whole move over here. Where is that? Where were we? Where were we? We're right here. No. We're right here. So like just calling it the midpoint kind of fair value of one whole move makes more sense to me than kind of having these bullshit candle low over here, candle high over here. Yeah, that's the fair value. No, like This whole move from that high to that low, the midpoint of here, like if the stock can pull back and hold the midpoint, which is fair value, that will be respected, and we can kind of look for the stock to go back into this high and then higher than that high. That makes sense to me. But calling it a gap is so dumb. Like you're just calling it a gap at that point to like entice people, because then you get to lean on this whole idea that gaps always get filled. Gaps always get filled. It's not a freaking gap. You're looking for the midpoint of that first move, midpoint of the second move, midpoint of the third move, and you're looking to see if the stock gets bought up in the midpoint. That's a fair value area. Like, calling it a gap is just so dumb. I guess I understand what he's talking about now. I understand what he's talking about now, and that's actually valuable. But putting it in a way that he's putting it is, you're just gonna like kill accounts this way. You're gonna kill accounts this way. This is nonsense. You gotta just understand, like, okay, look for buyers to come in, look for the tape to react with this area. But if you're using exactly that 3-bar candle construct, oh my god, and it's a gap over here, you're good luck with that one, bud.
To solidify our understanding of fair value gaps, let's see how we should identify them on the chart.
Please educate me.
Consider a series of bullish candles as illustrated. Let's begin our analysis from the bottom of the
So what are you calling a fair value gap? From here to here? So this is a fair value gap, and then you're calling from here to here another fair value gap. Let's see.
Here we have a 3-candle sequence represented by these 3 green candles. If we draw lines from the upper wick of the first candle and the lower wick of the third candle, we see a gap between them. Moving forward, we encounter another fair value gap within this subsequent 3-candle sequence. However, price subsequently experienced a downward push, ultimately filling all the gaps. In the continue, we witness a strong upward momentum in price. Now,
you know how many lines you're gonna have on your chart when you do this?
By drawing
you know how many lines you're gonna have on your chart when you do this?
Lines from the upper wick of this bearish candle and the lower wick of the following green candle, we identify another fair value gap created between the candles. Next, a little bit higher, we have another 3-candle sequence. However, if we draw lines once again, we see that there is no gap between the candles, and there is no fair value gap to identify. Once again, if we consider these 3 candles and draw lines from the upper wick of the first candle and the lower wick of the last candle, we see that there was a gap between the candles, which is mitigated and rebalanced with these 2 candles. Next,
he's saying the entry is right here, so you're looking for the stock to come back and fill the gap right here. That gap needs to get filled, and if it bounces over here, you go long. And you're saying, so he's saying that there's a gap over here, but the gap doesn't get filled, so you don't go long. There wasn't a gap over here, but there's a gap here, and the gap does get filled, so you go long here, and then you took for the long. Isn't this just a simple bull flag breakout, a higher low, a higher high, a little consolidation? Let's say these are 5-minute candles. You're getting a little consolidation, a nice little 2-bar pattern breakout, a higher day breakout, a bull flag breakout with the stop right down over here. But instead of taking the breakout entry, I guess this gives you the entry into the gap, the fair value gap. But Jesus, man, I mean, I understand what he's talking about right now. I get it. But are you really expecting me to put lines on every single minute by minute candle and then trade off of this gap fill theory? You know what, instead of shitting about it, let's kind of go see what he's talking about, right? So from the low high of this, no gap apparently, right? I don't think that's a gap, so there's no gap over there to get filled. But guess what, that gap got fucking filled. Okay, buddy, let's go to AMD instead, because this guy is really triggering me right now. 3-bar candle, forget your 3-bar candle. I got you a 1 2 3 4 5 6 7 8-bar candle here. Okay, how many gaps got filled on this 8-bar candle, mister? Let's see. 1. Oh my god, I'm gonna have to, you know what, I'm gonna go to a different chart. I don't want to have to revamp my charts over here. Let's go to AMD over here on the 5-minute chart. Come on. Come on. Come on, Lee. Come on, Lee. I want to eat my dinner. Come on, Lee. All right. So he's talking about 3-bar pattern. So what am I supposed to do? Put it on the high of the first bar. Higher on the first bar. And then at the low of the third bar. 1, 2, 3. Oh, there's no gap over there. Okay, no trade. So next 1, 2, 3. So put it on the high of the first bar and the low of the third bar. There's a gap there. Oh my God, what happened to that gap? It never got filled. Okay, low. That's surprising. Ha ha ha. Well, look at that. Okay, next. We go to next 3 bar. Put the high of that bar and then put a low of this bar. Right? There's a gap there, right? There's a how much of a gap is there? There's a 3-cent gap there, guys. 3-cent gap. Okay, now let's go for another one. Put a high over there and then put a low over there. Guys, there's a little bit gap there. The gap has to get filled. It never did. Okay, it never did. Eventually, where are you going long? Let's say this 3-bar pattern, right? You put a high over here and then now you get the idea why this shit doesn't make sense.
We have another 3 candles.
Instead of doing all that, simply looking at the high day to break. After the high day breaks, look for the high day to pull back and show support. See if we do pull back into the halfway range of this whole pullback, and we bounce off of the halfway range of that whole not pullback, the halfway range of this whole move up, and we actually bounce off of that, very bullish. But if we don't bounce the halfway through here, that's a little bit of a question mark. You want to see at least halfway of this range getting respected. If you ignore the whole move before this right here, just consider the green candles from 1140 to 1215. Let's say that was one buyer. Let's say that was just one buyer buying it all the way up here. His average price or her average price or its average price is right around 186. Right around, you know what? I don't have to guess for you. I'll put it in. What the hell? I don't have to guess for you. I'll put it in. His average price from there to there is right around here. Right? So when the stock comes back here, you want it to get respected from that. That's the fair value. Now, calling that a gap, putting 15 million lines on your chart at the high of the candle and at the low of the candle and then expecting and waiting for it to fill. What are we doing here? What are we doing here?
If we draw lines, we can easily identify another unmitigated fair value gap here.
Unmitigated fair value gap.
In this bullish candle series, we have identified 2 unmitigated fair value gaps. One located at the top and one located at the extreme. The price tends to push back down once again to fill the liquidity voids in these fair value gaps and then continue its bullish momentum. Price can reverse from the upper fair value gap, or it can push lower to mitigate the fair value gap at the extreme. Both scenarios could happen in the market. The same concepts can be applied to the bearish scenario. Now, let's take a quick breakdown of the real chart and see how we can utilize the fair value gap concept in market structure mapping. Before using a strategy or setup in a real account,
let the sheep believe more liquidity. Just like all
times.
Setup, it works quite with confluence. I mean, look, I understand the setup quite a bit, but what he has drawn over here, Juan, is
edge platform for backtesting our exclusive
using all those lines over there. I don't know about that.
If you're interested in using TraderEdge as your backtesting tool, be sure to check out the link in the description below. So here we have euro-dollar 1-hour chart on the screen. As you can see,
Forex, the most efficient market in the world. Forex
gaps with high probability. Firstly, we need to wait for the price to form a valid break of structure. Here,
anyone who talks Forex is automatically irrelevant to me. I'm sorry, I'm not looking at Forex. Forex is irrelevant to me.
Rule number 1. It emphasizes that for considering a fair value gap for executing trades and as an entry point, the price must lead to a break of structure or a change of character in the market. Without a valid break of structure and change of character, we must not execute any trades based on fair value gaps because these elements are essential signals that indicate whether the market will continue in its initial direction or experience a reversal. Rule number 2. In a bearish market, our focus should be exclusively on fair value gaps situated in the premium zone when seeking to initiate short positions. Conversely, in a bullish market, our attention should be directed solely toward fair value gaps positioned in the discount area to execute long positions. Rule number 3. Fair value gaps, situated at market extremes, hold a higher priority when it comes to trade execution compared to those found elsewhere. Rule number 4. It must be unmitigated. Fair value gaps areas are considered one-time use, meaning we focus on the trading opportunity when price first enters a fair value gap. Once a FVG has been mitigated, we do not consider it as an area of interest for future trading. That's it, traders. Thank you for watching this video. I hope you found it informative and useful. Don't forget to hit the subscribe button and turn on notifications to stay updated on our latest videos. We value your feedback and suggestions, so please leave your comments below and let us know what topics you'd like us to cover in our future videos. We appreciate your support and look forward to seeing you in the next episode.
Beauty of the market is there tons of way to make money. At the end of the day, there's no one way to make money, guys. This way could make money, that way could make money, your way could make money, my way could make money. No matter what, always make money and always lose money. That's the name of the game, just the way how things work. Now obviously you saw how we felt about this setup. I just don't like the way that the setup talks about taking entries by candle lining structure and calling that little pocket a liquidity pocket, a gap. That's what I would like to call it. You know, call it what it is, a liquidity pocket, and you're looking to see if that liquidity pocket, and the more appropriate terminology for this is called like a backfill, even though it's not a real backfill. It is a backfill. If you're looking at Sierra charts, footprint charts, and so on, you'll see where stops get blown out, right? Stops get blown out, the stock, and then eventually settles in the higher end area, and then there's a liquidity pocket. It makes that liquidity gap. For example, today I'll go to the charts right now, and actually this is a perfect time to do this. Go to the charts and talk about what was the stock today? AI, for example, when it breaks out of this area, goes right into, this is a 1 minute chart. Let's go to the 1 minute chart, please. Goes right into right there. That little pocket, call it the liquidity pocket. You calling that shit a gap is so stupid. And eventually it does come back down and fills that like the backfill. It backfills over here, and that's what the VWAP trader would say. These were stops get burnt, stops got burnt out. We have a little bit of a liquidity pocket. We want to see if the buyers here are still there. They're not, and that's why we pull back. You're not calling this you know, bar by bar gap fill strategy. That just sounds stupid to me, honestly. So the bar by bar thing is so crazy. That's just so crazy to me. Just call it what it is. It's a liquidity pocket. And if you turn on okay, right there. Ah, it kind of disappeared. Hey, fix yourself, fool. The hell? Okay, let's try to fix this again. Can we have that numbers, please? Aww. Trying to show you guys something. It won't. Oh, that's VWAP. Where is? Yeah, that's the one. Come on, dude. You were just there. Why did you stop working? Okay, there you go. There you go. There you go. There you go. Okay, okay, okay. Here we go. Here we go. Fix. Come on. Fix yourself. Ah. Reload. I have to show this to you. Basically, what I'm trying to show you is AI in that little pocket right here before the fill happens. You're gonna see that zero selling took place and only buying took place because whoever was short in this area, oh my god, I am an idiot. Why didn't I just do this? Volume profile. I am an absolute moron. Volume profile, fixed range. I want it from, let's say from here till, give me till here. Okay. Now give me the values for these two. Can I get the values? Visibility, coordinates, inputs. There you go. Okay, perfect. God damn it. Still showing me the size over here from this side. I don't want that. Can I draw this line back? Oh, look at that. It's showing me all the way from there. I don't want that, dude. Do it till here. So right here, you see how there was no selling at all? It was just stops getting burnt. Just stops getting burnt. So that right there stops getting burnt. It pops back down and buyers came right back into the 60s, 70s. We were long in this journey. I was watching the action take place. In that action, the stock broke out at 37.50, instantly went up 20 cents in the money. You saw the liquidity pocket play out. Call it what it is. Call them that a fair gap. And you know, the gap needs to get filled. I'll fill your gap, pussy. Come here. I'll fill your gap. Fucking idiot. But it's just so dumb, man. I hate shit like that. But I shouldn't call him stupid. I shouldn't call him an idiot. You know, every setup works. Everything works in the market. Everything works in the market at the end of the day. So that's the nature of it. I'm pretty sure his setup over there, the whole bar by bar craziness works. But I like to be a little bit more methodical. I like to be a little bit more systematical, not just use bar by bar type of strategy to get in. I like to spot the buyers. I like to spot the sellers and party with them. And join their party because they're the party. They're the main party. They're the one with the most money. So I want to join them. Using these bar by bar systems to kind of come up with my own psychoanalysis. I feel like I'd go crazy doing that. And we're going to leave it on that rant. We're going to leave it on that rant. We're going to leave it on that note because it's 10 o'clock. I got to call it a night. I got to wake up in the morning and I got to run to work tonight. Today in the morning, I got late because I was up way too long last night charting. So I don't want to do that. I want to eat my food. I want to go to bed. So I'm going to call it a night, guys. I will see you guys Sunday, 6 o'clock. That's the next stream time. So come back Sunday, 6 o'clock Eastern Standard Time, Monday to Thursday, 8 o'clock at night. So I'll see you guys then. Have a great start to the month. Have an even better weekend. And I'll see you guys Monday. Oh no, Sunday. Good night, guys. Adios. Ciao.